Hey everybody, this is Ben Kesnoka, co-founder and partner at Village Global, a network-driven venture firm. And this is our podcast, where we go deep on all things business and technology with world-leading experts.
Hello and welcome to Venture Stories. We're thrilled today to welcome Julio Vasconcellos and Anne Martins, both partners at Atlantico, a Latin American-focused VC firm. Julio is also co-founder of Canary, a seed-stage firm focused on Brazil. Julia, Anna, and their team published the famous yearly Latin American Digital Transformation Report, which we're going to talk about today. Welcome, Julio and Anna.
Thank you. Thank you for having us. Wonderful to be back.
Well, yes, this is become an annual event. And let's set the table. Can you remind us what's the size of the LatAm market?
So I think that the thing to remember about Latin America is that it's huge, both in terms of people, right? It's over 650 million people when you sum up the region. And the economy, the sort of total GDP is around $6 trillion. So if you were to consider it a country, you'd be sort of number 3 in the world, both in terms of the size of the economy and the population.
Got it. And there are some big movers and shakers within the region. And so how should we think specifically about the relative size of Brazil and Mexico?
Yeah, I think that the key thing to remember is Brazil is roughly a third of the region, both sort of population and GDP, and Mexico is around a quarter. So when you consider those two, I think they're usually pretty indicative of what's going on everywhere, because you have over half the people and half the dollars.
Great. And your optimism about venture scale returns in the region is validated by an index you created called the Digital Transformation Index. Can you explain that?
So we developed this Digital Transformation Index in the first year that we published the report back in 2020. Now we're on to the 4th year. And what we did here was we looked at the value of all publicly listed technology companies from a given region. And we compare that value to the GDP of that region, just to be able to kind of compare apples to apples. And then we compared it across regions in the world. So we looked at Latin America and Brazil specifically within it, United States, China, India, Southeast Asia. And every year we publish the main regions. And the interesting thing to look at is, when you double click on the index and you look at, for example, the United States is at over 60% when we think about that kind of technology company penetration. China is around 20%, India is a little over 10%. But then when you shift your gaze to Latin America, which is at 1.8% today, it's pretty shocking how we are an order of magnitude lower than a lot of those other regions, even though, as we mentioned in the beginning, we have a huge population, we have a large economy. And I think what we concluded here is that, despite the great opportunity, because we started later in terms of technology penetration and technology evolution, we're still catching up. And when we double click on this data and we look at actually the last 20 years, we've done this analysis over annually since 2000, since the year 2000. What we notice is that Latin America is roughly 10 to 15 years behind where China is. The curves look very different, but it just kind of shifted in time about a decade. And China is about 5 to 7 years behind the United States. So when we think about the progress of technology and the fact that software, technology, innovation isn't really the monopoly of the United States or Europe or China or other of the sort of further ahead economies in terms of technology innovation. We really think that this technology genie is out of the bottle. It is accessible to everyone. We think that this catch up is going to happen over the next 10 to 20 years, and we think that it's going to create sort of this massive value as Latin America and Brazil catch up to some of these more developed countries. And we're not here to say that we think Brazil is going to be at the same level of penetration as the United States, but we definitely think it's very feasible for us to be around the same levels of penetration that you see for China, and certainly, at the level of India, if not further ahead than India, a country that, although has a massive population, has a much smaller GDP per capita, just a, generally poorer population when you compare it to Latin America. And the reason why we're optimistic when we think about this digital transformation index is when we think about what the potential for value creation is in the region, right? If we take Latin America and you think that we could catch up to India over these, call it next 10 years, we're talking about a potential for value creation of roughly $600 billion. And if you look a little further ahead and you think we can catch up to China or even the United States, now you're talking about value creation that's measured in the trillions of dollars. And that really is what I think drives a lot of our optimism, or in particular, our long-term optimism about the region.
Yeah, and if I could add on to that, Anne, I think one new piece of data that we've brought this year, and we have our friends at Clock Tower Ventures to thank for that. As Julio was mentioning, kind of the comparison to India, when we actually stop looking at GDP and we look at the total value of market capitalization in public equities markets across countries, and we compare Latin America to India, 2023 is actually the year where the tech percentage of that market cap reached the same levels as India. So if you kind of trying to compare apples to apples here, you look at the total market capitalization of public equity companies in Latin America and total market cap of public equities companies in India, the percentage of penetration of tech in that value is roughly the same. So we're seeing kind of these very early signs that are positive indications that we do have the potential over the next decade or so to create the amount of value compared to India, which, as Julio mentioned, it's in the hundreds of billions of dollars.
Exciting. And you released your Latin American digital transformation report today. What surprised you most versus a year ago?
Yeah, I can take that one. I think what was, really, really interesting this year is that the level of optimism that we're seeing from founders, which are kind of the population that we surveyed, but also more qualitatively from investors as it compares to last year, it's really impressive. And optimism kind of went only from 8% last year to nearly 44%. I think Julio here always says that for you to be a founder, you need to be extremely optimistic, right? So when we're talking about 8%, that's basically negative 100 in founder language. So we're really starting to see kind of that optimism pop back in, and makes us excited for what the future could look like. I think that was the most surprising piece of data on my end. I don't know, Julio, if you have anything to add.
Yeah, I mean, I think I would just add on to this point on the founder sentiment, right? I think that the growth and optimism is key, but I do think it's also worthwhile mentioning that there is still kind of a lingering feeling of caution. Last year, almost 60% of founders said that they were feeling cautious about the year ahead, and that number has certainly dropped to a little below 50% this year. But the fact that a lot of founders are still, proceeding with caution, even though with a lot of optimism and a lot of excitement, I think it does speak a little bit to the experience over these last 18 months or so. And I think that it's hard not to have this feeling given just the kind of whipsaw nature that the markets have taken us through over these last 2 years, I would say, and certainly in the run up to this, last drop that we saw in the market. I think that founders were hard pressed in terms of their strategies over the last couple of years. They were, by and large, forced to take the hard medicine and, cut team sizes, cut burn, extend runway in order to really be able to kind of be leaner and meaner and be able to execute better. We did a survey with a few hundred founders, which we did in collaboration with Runa, which is a startup up in Mexico, and we saw that almost 3/4 of all companies had some sort of layoffs in the last 18 months. So you clearly see that it was a challenging time, and I think that obviously leaves some battle scars with founders. But I think the fact that we now have greater agility, greater focus, and greater runway, I think does bring this renewed sense of purpose and optimism, like Anna said, going in the next couple of years.
Great. And now let's turn. What did you learn about fundraising?
I think when we turn to fundraising, and I'll speak to just funding levels more broadly, because I think that's obviously the way that this gets manifest in the region. First thing I would note is that Latin America had one of the sharpest decreases and adjustments in venture funding. When we look at the Q2 data of this year and compare it to about a year ago, we had a sharper drop than, call it, the sort of the U.S. average. But that's also a fact that the increase here was greater also a few years back. So as a smaller region, I think that things tend to be a little bit more volatile. So the highs are higher and the lows are lower. But I think that it's important not to lose sight of where we are in history. When we think about 2021, we really see that year as the exception rather than the rule. We think that was a year that we all know here was a year of excess, not just in Latin America, but around the world. And even though we're far down from those peak levels of funding, when you look at the last 4 quarters of venture funding in Latin America, and things have stabilized here now for 4 quarters at around $1 billion a quarter of venture funding. That's the same level that we saw back in 2020. So we think it's still a very healthy level when you compare 2020 and 2019, to the years that preceded those years. They were already sort of significantly up from historic levels. So we think that the level of funding that we have here is healthier. It's enough access to capital for new companies to get started, to get scaled. And we do think that that's also something that contributes both to founder optimism, but also to investor optimism. I think the last thing I would say is that the other curious thing that we saw this last quarter was that the volume or number of deals, the deal count in Latin America went up, even though total dollar volume of funding was stable, with deal count going up. What that means is that sort of the average round went down, right? The amount raised per round, and that's usually a pretty good indicator of valuations. We definitely saw kind of a valuation reset. We can go into that a little bit deeper later if you wish. But we saw valuation reset. We saw rounds getting smaller. I think we saw founders and investors just being a little bit more cautious, as I mentioned before, going forward. But the fact that deal count is going up does also reflect the fact that the market is picking up. We certainly feel, qualitatively that this quarter we're much busier than we were, probably in the 12 months prior. So we're starting to see kind of that renewal of founding of companies and of excitement going on in the market.
So what happened to all the private unicorns that have been funded recently over the past couple of years?
Yeah, so we saw a huge kind of uptick in both the number and the valuation of unicorns from 2020 to now. I think that's been kind of big news all over the world. It's what attracted a lot of foreign investors in the region, kind of starting in 2018, but really picking up in 2020, 2021. And maybe even before we go into the data, more qualitatively, we host something at Atlantico called the Good View Summit every year. And what we basically do is we host a weekend off the record chats with all of the Brazilian CEOs of unicorns to a little bit of educate ourselves in terms of what's top of mind for them. And a lot of those learnings we're able to apply to our own portfolio companies. And before planning that event every year, we reach out to all of them and we ask, hey, kind of what's been top of mind for you? What have you been discussing at your board meetings? What would you like to discuss at this event this year? And not surprisingly, I think the past couple of years have been more about kind of making adjustments according to the market, right? So as Julio mentioned, 78% of companies in the region did layoffs in the past 18 months. And this came not only from kind of early stage companies, but also unicorns, also big traditional companies. And so it was a big topic over the last couple of years. But this year, we kind of saw kind of liquidity and preparation for exits come back to the top of the list. And that's a long-winded preparation, right? It usually takes 1, 2, 3 years for you to be able to fully prepare your company for an exit and to build up to an appropriate kind of level of growth and of compliance to be able to pursue those exits. But that's a pretty good indication for us qualitatively that some of these unicorns are, really, really great candidates for IPOs or big acquisitions in the next 2 or 3 years. And we saw kind of a few examples from the past couple of years, right? We saw Nubank IPOing at a $41 billion market cap. That was the biggest exit that we've seen in the past 5 years in emerging markets. I think the only one that comes close to that is Grab in Southeast Asia, based out of Singapore, but operates all across Southeast Asia. And Gympass recently raised kind of a big private round, 2.4 billion valuation, showing that it's been able to reach market expectations for both growth and profitability. So looking forward, we expect this trend to continue for those companies that have been able to make the proper adjustments, that have been able to pick back up on growth. I think names like iFood, Quinto Andar, Loft, Wildlife, these are all really great candidates, and great quality companies that, might be preparing for an exit soon. So we'll hopefully see this kind of exit window opening up again in the next couple of years.
Can you talk a little bit more about how founders are thinking about going public, potentially in the United States versus the M&A market?
Yeah, I think historically in Latin America, you've kind of had three different exit paths, right? You can either go public in the United States, and that's usually reserved for the bigger companies, as we've seen with Nubank, with earlier on, with PagSeguro, with Stone. We've also seen quite big M&As in the region, kind of the most recently being Pismo, right, which was acquired by Visa for $1 billion. But if we backtrack a few years, we also saw 99 being acquired by DD at $1 billion, which is a similar level to some companies that have chosen to IPO abroad, such as Vtex, right? If I'm not mistaken, I think they've IPO'd at the $1 billion mark as well. So I would say it depends company to company, but those are all pretty valid exit pathways. When we look at local IPOs, those have kind of picked up in the past few years as well. We saw companies like Melius and Dwane deciding to go public here at a market cap closer to kind of $400 to $500 billion, which is still pretty large companies, both in terms of their revenue, also in terms of their reach across the country. I think the decision usually depends on the nature of that company, and also what is the appetite both for IPOs in the local and broader market, and also the interest from bigger acquirers, which is usually more scarce, right?
So a big story of the past 12 months has been inflation. Can you talk to how inflation and other macro factors impacted the region?
Inflation is a great topic. I think to reflect on the region, I remember growing up in Brazil in the 80s and 90s, and going to the supermarket and seeing the price adjusters going down the aisles and kind of adjusting prices, almost daily as hyperinflation took hold of the country. And I think that in the same way that memory has been sort of seared in my head and in my past, I think that central bankers here that also grew up here in those times of hyperinflation, and the same story played out in Mexico and Chile and Argentina to different extents and at different points in time. Central bankers here also have great deep experience and scars from dealing with inflation. So when the entire world saw inflation ticking up a couple of years ago, Latin America was actually one of the first regions to quickly adjust interest rates and increase rates to tame inflation. And I think the fact that central bankers here were willing to act pretty swiftly and pretty early is now starting to pay off, right? So we just saw the Brazilian central bank and Chile as well being some of the first countries in the entire world to lower rates. So as we start seeing kind of that rate lowering motion, the expectation is that that'll help to fuel growth in the economy. It'll also help fuel a shift of capital, at least in a comparative sense, from, safer fixed income type investments to higher risk, longer term investments like venture capital. So we definitely see that as a strong tailwind that we have now from something that used to be a headwind and continues to be a headwind in a lot of other places in the world. But I think that, when we talk about macro, it's not just about inflation and interest rates. I do think that there's a few other important factors here at work. We wrote this year that Latin America is the engine of the world when we think about what the world needs. And the world needs two things today. One is we need green energy. And as we think about the energy transition that's taken over the world and the minerals that you need to fuel that transition for the shift to electric power, to wind turbines, a lot of those minerals are greatly concentrated in Latin America. And Latin America is the world's greatest export of things like lithium and copper and everything else. And the demand that's forecast for those minerals, those commodities, is expected to grow incredibly over the next couple of decades. So as you start seeing that migration to green energy production worldwide, that is going to provide yet another tailwind, I think, when you think about Latin American exports and Latin American growth. And I think that the last way that we think about this as well is maybe through a more geopolitical lens in a world where things have become much more polarized between the United States and China. Latin America, as one of the regions that has been able to actually maintain a pretty neutral position, has come out as an unlikely winner in this more polarized world, right? We've both been able to increase trade with the United States. So I think just as of last month, Mexico became the US's biggest trade partner, kind of surpassing China. And on the flip side, so we were winning, through nearshoring and through exports, kind of on the U.S. side, but also on the Chinese side, have great exports and great trade that's coming out of China that perhaps is being prevented from coming to the United States. And we do start seeing kind of that trade balance with Latin America increasing with China. We now see, as of 2020, China being Latin America and South America's biggest trade partner ahead of the United States. So we're kind of winning on both sides when you think about trade balance and exports and economic growth. And I think all that triad of factors of lowering interest rates, greater demand for commodities out of the region, as well as sort of this greater growth with both the U.S. and China, I think are all huge magnifiers of the future macro situation in Latin America.
That was the first time I had seen anywhere was your report highlighting that Mexico has become the U.S.'s largest trading partner. So really interesting data. Now let's talk a little bit about Brazil specifically. What's thriving there?
Yeah, so when we think about Brazil, I think it's a pretty good proxy to think about Latin America as a whole when you're seeing it from the perspective of an investor, right? Most venture dollars flow into Brazil. Actually, this year, what was really surprising is Mexico, for the first time, reached a very similar level of venture dollars compared to Brazil, and we can talk a little bit more about that later. But the scenario in Brazil continues to be quite optimistic, not only at the macro level, but given that financial services is such a big driver of the economy in Brazil, the success of financial inclusion, mostly fueled by the central bank here, has been truly impressive. And I think it's kind of building the foundations for a lot of new businesses to start and to take advantage of that opportunity. So for those of you that don't know, the central bank in Brazil has become kind of a global benchmark for how to implement both a real-time payment system, which we call PIX here, but also a very complete open banking agenda that allows users to have more control over their own data, allows financial institutions to trade data with each other, which is very valuable when you think about different services that they can offer, how that can improve their ability to give credit, for example, offer services such as insurance, investments, pensions to users. And so they've done a really, really incredible job. And what we've seen this year, we've seen PIX, which is the real-time payment system, for the first time completely overtaking cash. And when you think about the implications of that, right, it's more it's a great benefit to the population in terms of convenience, but more than that, it's a huge proxy for financial inclusion. So what happens when kind of money truly goes digital is that people will start to have a lot more access to every other financial service that institutions have to offer. And when you see kind of how that correlates with the formality of the economy and access to credit, the correlation is very strong. So that's something that's gotten us pretty excited about Brazil and the types of companies that can be built here going forward.
How do you think about Mexico opportunities these days?
Yeah, it's interesting because we saw a really big dichotomy in this year's report, right? We saw kind of venture dollars getting to the level of Brazil when you think kind of percentage of dollars in Latin America going to Mexico versus Brazil. But we also see that in terms of digital maturity, Mexico still lags a few years behind. And it's hard to say how much, but I would say something around kind of 5 to 10 years. And there are a lot of factors feeding into that, right? There's the level of informality in the economy in Mexico is much higher than what we see in Brazil. The cost of data in Mexico, kind of if you think about the level of competition that's historically been in Mexico when it comes to telco, it's been very low, and the cost of data for users is very high, which means it's much more difficult for them to access digital services. And most of all, when you look at bankerization, I mentioned here, in Brazil, we see only 20% of payments being done in cash. That number is 60% in Mexico, right? And again, that's extremely correlated with the level of formality in the economy and also access to credit. So there's massive opportunity for that to improve in the future. We're seeing a few tailwinds. The central bank now is launching a new payment system called Demo, which is a little bit more similar to PIX in terms of what it requires from users to be onboarded into the system and to make transactions. Mexico tried to do that before back in 2019 with Cody, but the adoption was extremely low. When you look at the number of validated accounts today, that's around 10 million in Mexico. and Brazil, for Pix, just to give you a benchmark, that number is nearly 500 million. So the success in Brazil has been much greater, but we're seeing the central bank make more moves in Mexico towards a more digital economy. And we're also seeing kind of the rise of more fintechs in Mexico, the rise of neobanks in Mexico. So there's a few tailwinds that might explain a little bit more of why venture dollars have been flowing more to the region, alongside some of these macro factors that we mentioned before, such as nearshoring, which are, a lot of investors are betting that's gonna fuel the economy in Mexico. But if you take a step back and kind of look at the level of maturity of the market, it's really a few years behind Brazil, which maybe it's a good thing. If you think about Brazil 10 years ago, massive opportunity for investments. That's when a lot of the companies that we're seeing the exits that we mentioned, as we were talking about before, they started 10 years ago. So that's the way that we've been seeing Mexico as investors.
Great. And in addition to thinking about the countries, are there particular cities, school alumni networks, company alumni networks that are entrepreneurial hotbeds these days?
It's unsurprisingly, right? A lot of the entrepreneurial action in Brazil is concentrated in São Paulo. You have a little bit of action in Rio. When you think about Mexico, it's a lot in Mexico City. Guadalajara has been an unlikely hub that has emerged in the past few years. Monterrey is also the level of the universities in Monterrey have actually yielded amazing entrepreneurs based out of Monterrey. In Colombia, a lot of the action is concentrated on Bogota, but maybe the ecosystems that are more underrated is when we look to places like Argentina, right, where investors, especially from outside of the region, have chosen to stay away from, and it makes total sense. I mean, the volatility of the economy is crazy. The country is experiencing a period of hyperinflation. It's really hard to predict where regulation is going to go. But the talent in Argentina, in part because of the rise of Mercado Libre, which is the biggest tech company that we have in the region today, is really amazing. So us as Atlantico, we actually have 3 companies that are based out of Argentina and operate in different countries in the region. So there's a really amazing hub for founders in Buenos Aires. There's a great hub for founders in Uruguay. And a lot of these founders kind of get their companies up and running, already thinking about expanding to other countries.
And for a while, we heard about the alumni of Rappi, maybe alumni of Nubank. Are these the places that are kind of shedding entrepreneurs who are starting from ground zero, or do you not observe that phenomenon so much anymore?
I think we still see a fair share of entrepreneurs coming from those companies. I would add a few to that. In Uruguay, we see dLocal. There's a big kind of dLocal alumni starting new companies in the region. A lot of them starting companies in the fintech space, payment infrastructure, payments, etc. When we look at Meli in Argentina, there's a lot of Meli alumni, especially Mercado Pago alumni that are building in the fintech space as well. I think those alumni groups are still very much thriving. If you think about the period, for example, Nubank's IPO wasn't that long ago, right? So the time that it takes for the employees to fully vest their stocks, to decide to start a new company, and then eventually get to the stage that we invest in at the Series A, you have a few years there. So we would expect to see more companies coming out from those alumni groups.
Great. And let's dive into the particular sectors that you're most excited about for either founders starting companies or early stage investors.
Let's just talk about two sectors or models that I think are interesting and one that's more emerging. First of all, fintech is one that you can't ignore in Latin America. Depending on the year, it's anywhere between 40 to 50% of venture dollars go to fintech. Latin America has really emerged as one of the global leaders in fintech. Nubank that Anna mentioned is probably one of the most successful fintechs in the world. And we continue to see innovation there. We saw potentially kind of this big third wave of innovation happening with the advent of multiple kind of financial infrastructure companies that enable other companies to become fintechs or for other fintechs to start. So you have multiple unicorns today, maybe chief amongst them, Doc, the company that provides a lot of that infrastructure. We think probably another couple of emerging unicorns, companies like, QI Tech and Nalogica and other folks like that have been growing very well, and we think are also kind of fueling this new wave of fintech. We also think there's another opportunity here with B2B fintech. So if the first revolution of fintech was for consumer, we do think that now businesses, especially small businesses that tend to behave a lot like consumers, are now adopting technology and innovating in the way that they, manage financial flows and manage everything related to sort of their finances. So we're excited about that. We think that one of the big changes that's been happening in the region, which has been driven much more by the regulator, by the central bank, and its innovation agenda around digital payments, whether that's PIX that we've talked about before, the sort of instant and free payment rails that have been rolled out in Brazil and are now used twice as often as cash is, just to give you one statistic there. But also with the open finance agenda that has been enabling, data transfer and, data sharing across financial institutions and kind of putting the power back in the user's hand as far as how your data is used and how you can unlock credit that way. And we've seen, a greater level of competition, a greater level of formalization, and therefore an increase in access to credit and growth when it comes to financial services. So we continue to be excited about that new wave of financial services and fintechs in the region. The other one I would say is around where we think the opportunity for SaaS is and software. But broadly speaking, we again saw that the software market in Brazil was largely concentrated on the enterprise over these last few years after kind of some big consolidation that happened. And I think big international entrants, the likes of SAP and Oracle, fighting with sort of the local players. And we think that now with some of these more, vertically focused SaaS models that are able to go to, again, small and medium-sized businesses and offer them a one-stop shop for all of their digitalization needs. We think that the opportunity there is huge. Again, just to throw some numbers here, Latin America, actually, when you look at all the businesses in Latin America, a greater percentage of them are SMBs compared to countries like the United States. So we have more SMBs here, but they actually contribute a lot less to the GDP than elsewhere. I think here only about 25% of the GDP comes from SMBs versus almost 50% in the United States, even though we have more of them proportionally. And we believe a lot of that is just because you need to increase productivity, you need to increase formalization, you need to increase efficiency, all things that technology and software can do. So we're big believers that access to some of these new vertical software models are the way to go. And we think a lot of these companies are going to just compound over the next decade and create some of the big next opportunities in the region. We've made a few investments in that space. And I think last but not least, in the more emerging camp, we've actually gone into this conversation, maybe, I don't know, half an hour or so without mentioning AI. This is probably some kind of record in a tech podcast these days. But we think that AI, and I think this new wave of generative AI actually has a lot of room to grow and expand and create value in Latin America. And I actually think, more so even than the United States, because when we think about, businesses are meant to solve unaddressed problems, we certainly have our fair share of problems. And when you think about the problems that exist in Latin America, some of them are access to quality education, access to quality healthcare. Maybe it's, excess red tape and bureaucracy. And these are all kind of prime candidates when you think about what generative AI can do. Can you bring, sort of an individualized tutor for all, or can you give access to medicine and high quality doctors and nurses and examination evaluations for everyone? And these are all kinds of use cases that are getting developed very, very rapidly. We actually highlight a few companies that have shown real results by applying AI models in education and healthcare, in the legal sphere, in debureaucratization. And even though this is something that's less than a year old, when you think about the new generative AI models, you already start seeing companies show real results. So when we think about what's to come in the next 3 years in such a fast-moving environment, we're extremely excited about the kinds of businesses that can be built here, and also about the real meaningful impact that they're going to have on our society. So we've been supporting founders there. I think we've been supporting the ecosystem as a whole in terms of trying to bring more information, more awareness of what's going on here, and we hope to be deploying more and more dollars over the coming years against these AI-enabled opportunities.
Excellent. So let's get super tactical right now. For a founder today, what are round sizes looking like at the early stages?
So the first thing I would say here is that the last year has been fairly slow as far as venture activity, right? We definitely had a general slowdown. We've stabilized at a level that's maybe 65% lower than what it was a year ago, and even more so than what it was the 2021 peak. So the first thing I would say is that the data points are still sparse, so it's hard to have an exact conclusion. But just to give you a few guidelines, when we looked at the peak period, 2021, and we looked at, let's call it like the average seed round that was getting raised here, you're probably talking about companies raising $1.5 to $2 million rounds in valuations that were, $20 million in many cases. I mean, you saw some companies raising valuations that were $40 to $50 million, right? And we're talking about seed rounds here. So you definitely saw the exuberance flowing through to the seed stages, both in terms of valuations and round sizes. Fast forwarding a little bit in terms of the Series A's and kind of the next round, you were probably looking at, $15 million rounds getting raised and valuations that were, starting at 50 million, many going all the way up to 100 million. I'd probably peg the kind of the median Series A valuation at the peak at maybe, 75 million. This is sort of my estimate here. Now let's look at the last quarter, maybe as a good benchmark for where we are today. I would say that, seed has probably dropped by at least half. So those $1.5 to $2 million rounds are probably looking more like 750,000, maybe at the high end of $1 million rounds getting raised. Valuations that were at 20 million are probably now, closer to 7 to 10 million. So that gives you a little bit of parameters of everything kind of getting cut by at least half. At the A, that's probably where you have the least amount of data. But I would say that our view, at least the qualitative feeling, is that valuations have reset, to 30 to 50% of the value they were at the peak. So roughly the same. I think round sizes are in the 7 to 10 million is probably a safe guess of what a sort of a typical Series A median round might look like today. And again, those valuations at about half the levels they were. So you're probably talking about 30 to 50 million dollar valuations today at the A, as opposed to those 50 to 100 million dollar kind of guidelines that we probably saw at the peak periods.
And what would you say if a founder asked you what needs to be true to raise a Series A today?
I actually, a lot of founders ask me that question, and I don't love that question because I think it's really difficult to answer for different types of businesses, right? Like, just to give you a sense at Atlantico, our thesis here is that we invest in companies that are post-product market fit, right? And have shown kind of early signs of product market fit. And a lot of the time that translates to a Series A. We've also seen that translate to a pre-Series A. We've also seen that translate to a Series B. So kind of different sizes of rounds, different valuations, and different aspects of a company that you measure in order to determine product market fit. So I think if you look at a company, for example, in the healthcare space, right, that is a B2B company that depends on rolling out their product within a large insurance company that has over 20% of all of the market share. That company might have different signs of product market fit that don't reflect yet in the revenue when you compare it to a consumer product, for example, right? So you have that kind of classic $1 million ARR benchmark that was being probably a little bit more ignored back in 2021, a little bit kind of overrated today. But I think it's difficult to generalize that for founders. I don't know if we've ever given kind of consistent advice on this. Julio, what would you say?
I don't know. I always say kind of just focus on the problem you're solving and trying to build something that you feel has real meaningful impact. I think trying to kind of work backwards from what investors are looking for and what's hot and what's getting funded. Sure, I think maybe it's like a short-term optimization, but at the end of the day, you're signing up for something for the next 10 years of your life. So, if it's not an area that you're passionate about, and if it's not a product that consumers really want and solving a real need. At the end of the day, anything that's kind of a short-term optimization is not going to stand the test of time. As far as our view as investors, maybe what's changed is that businesses that were maybe kind of growth at all costs, very low margin, very high capital costs, all those kind of businesses. I think the investment community as a whole has turned more sour to them. So if you are, as a founder, thinking of something that kind of needs a $1 trillion before it can turn a sort of positive growth margin, that's probably not going to fly nowadays anymore. But again, I think it's more just a sign of the time of everyone feeling a little bit more cautious and looking for real business fundamentals. And when I say that, I mean sort of better unit economics, better profitability metrics a little earlier in the life of the business rather than postponing this ad eternum.
I would say that kind of if you're looking at raising a Series A as a founder, I think the most important question to ask yourself even before you start thinking about what's the ideal revenue metric, the ideal gross profit metric at that stage is do I have the conviction that this product is showing the early signs of product market fit, so that once I raise a $7 to $10 million round and I put more money into this machine, that it's going to yield the results that I expect it to. And it's, you as a founder can answer that question much better than we can, knowing 1% of your company versus 100% of your company, right?
Very good advice. That's part of being a founder, is being able to write the rules. And a couple years ago, we heard a lot of buzz about global multi-stage firms being very active in Latin America. What are you seeing these days?
Definitely the global multi-stage firms are taking some of their foot off the gas pedal as far as the big crossover hedge funds, I would say. And I think that's actually probably the case all over the world. I think a lot of folks are just spending more time on public markets that have had valuations reset a little faster than private market. So you definitely see the likes of the Tigers and Coatus and D1s that were pretty active, I think, kind of retreating a little bit when it comes to the last year or so. I do think that there are some of the global platforms that have been classically focused on venture. And here I would list firms like Andreessen Horowitz, Thrive Capital, Lightspeed, as some of the names that we've seen be quite active in Latin America in the past and continue to be so today. They're still spending time here, having partners fly down. It's definitely an area that has sort of piqued their interest, and they see the opportunity. So it's healthy for us to see that the global interest from true venture capital investors continues to be pretty strong in the region, even if maybe some of the, call it, hotter money that was coming from hedge funds and I think some of these multi-stage funds might be kind of evaporating as it has everywhere in the world.
Great. And could you describe a recent investment and how you got to conviction?
Yeah, I can try to tie that maybe into the report. I think Julio talked a little bit about the opportunity that we see for software, right? And the reasoning behind that, I think, is twofold. I think from the perspective of a small business, right, the level that it's contributing to the GDP, we mentioned, it's much lower than what we would expect in countries that have higher levels of digital maturity. But also when you start seeing the signs that these businesses are ready to be digitized. And of course, those signs are stronger or weaker depending on what countries you are in. But the uptake and adoption of digital tools, whether we're talking about digital payments or whether we're talking about software, gives us kind of the first indications that these businesses are ready to change the way that they function. Whereas historically, what they've done is usually, hey, I know someone that has built a software that kind of works for some of the problems that I have here in my business, and everything else is kind of good enough. I do it on an Excel spreadsheet, I do it by hand, and that's okay for my operations. But today we're seeing tools being built, which maybe we were seeing before, but that businesses weren't yet ready to adopt. But now we're seeing the tools and the readiness for adoption increase, especially when we look to Brazil, a little bit less so when we look at the rest of Latin America. But honestly, we've been incredibly surprised with what companies have been able to do for small businesses outside of Brazil as well. And so one investment that we've done in that space was a company called Fudo. They're vertical software for restaurants. Again, founders based off of Argentina. The CTO was a former engineer at Ristorando, kind of one of the early tech companies in Argentina, created the product, bootstrapped the company, and then the CEO kind of came in when the company was ready to scale as a Mercado Pago alumni. And they started expanding this company outside of Argentina, gained really meaningful kind of market share, both in Argentina and Chile, and most recently launched in Colombia, Mexico, and now Brazil. And they have been doing an incredible job of digitizing a lot of the workflows that are tricky for these restaurants. And I think what makes restaurants in specific, we have an interesting graph that we collaborated with our friends at Tidemark, who are well known for their pieces on vertical software, on which markets are kind of more prime for disruption when we look at Latin America. And when we're talking about kind of prime for disruption, we're talking about market size, but also level of fragmentation and complexity of the workflows and how they differ from other industries, and then therefore are harder to tackle from a horizontal software point of view. And restaurants are kind of at the top of that list. So this is a company that we've been extremely excited about. They've been doing an incredible job, just launched here in Brazil. Maybe that's one investment that comes out from some of the research that we've shown in the report this year.
Great. That's an impressive thesis. We backed Morado, which is SaaS and supply chain for beauty businesses. Yes. So that's very aligned with that kind of theme and enablement of mobile commerce trends, which were highlighted in your report. So wonderful. Well, we will link to your report in the show notes. And what's the best way for founders to reach you?
I think you can always reach out to us on LinkedIn. Either myself or Anna, we're there. And I think usually the best way to get our attention is to find someone that we know in common, that we both trust, and have them introduce them to us.
Okay. And then what's the final word on prediction for the next year and maybe the next decade for startups in Latin America?
I think on my end, the prediction is pretty simple. I think it's just we've tried to show through data the amount of value that stands to be created by tech when we think about the next decade. I think the themes where that are going to dictate where this value comes from are still to be decided. I think if they were clear, maybe we would be out of a job. But hopefully we've given everyone enough data for both investors and founders to feel equipped and educated enough about the region, if you're coming from outside of the region, to make an informed decision of where you believe that value is going to be created, and where you kind of want to place your bets. So maybe it's a very kind of non-prediction, but just being very excited about the billions of dollars that can be created in value over the next few years in Latin America by tech.
Yeah, I think at the end of the day, what we've tried to do in the report this year is to really stick to this theme of the tectonic shifts that are happening in the region. And we highlighted 5 of them because we think that when you have these massive dislocations in the market, that's where opportunity arises. And the companies that embrace those changes and leverage those opportunities for innovation, and they could be new entrants like startups, but they could also be incumbents that do embrace innovation. I think that they can really surf this positive wave of value creation and win from those tectonic shifts and those changes, versus those that resist them. I think that this ends up being much more of a threat and much more of a challenge. So we would use that as a way to guide investors and entrepreneurs and executives' attention to where there's the most dynamic nature or dynamic changes in the market today. And try to innovate there. We ultimately think that our role as investors is not to predict the future, but really kind of bet on those that are defining that future. So we try to be smart and try to be educated about what's changing, so that when the next entrepreneur that has a brilliant idea that we could have never imagined knocks on our door, we're ready to write that check quickly and sort of be able to support them in that journey.
Wonderful. Well, Anna and Julio, thank you so much.
Thank you very much, Panta, for having us.
Thanks so much for listening to the Village Global podcast. You can check us out online at villageglobal.vc. We'd love to hear from you, your feedback, your ideas, your inspirations. You can email us at hello@villageglobal.vc.